Hey investors, welcome back to another episode of vishalvealthview. In today's episode, we are going to talk about a recent IPO that's hitting Indian market. It's called Groww. I'm pretty sure a lot of you watching this video must be managing your portfolio using Groww as a broker. And I personally myself have been using Groww for past 4 and 5 years since from the moment I started investing. So in today's episode, we're going to talk about the details of this IPO, the issue size, the valuation, the gray market premium at which this IPO is trading right now. We're also going to talk about its financial results, what's the growth prospect, and does it make sense for us to apply to this IPO or not. So without wasting much time, let's start this episode. So first, let's try to understand what's the business model of Groww. Groww is a D2C company, direct to consumer, and they have broking business as their primary business model. Anyone who wants to purchase a stock, anyone who wants to purchase a mutual fund, they can come to Groww and they can place an order. Every time you purchase a stock, Groww takes a cut out of it. Every time you place a future and options bet, Groww takes a cut out of it. So these platforms are going to charge you as per trade, and that's their core business model. Let's take a look at the product and services offered by Groww. The first one is equity and derivatives trading. This is one of the primary revenue source for Groww. Second is mutual fund distribution and SIPs. Groww offers both direct and I think indirect mutual fund, basically through direct and regular mutual fund. And you can go to Groww platform and purchase these mutual fund. And I think this holds a significant amount of Groww's revenue as well. Apart from that, they also have margin trading facility, personal loan, and loan against security. This is something new. I'm not sure what's the revenue for this particular business segment for Groww. Apart from that, they're also offering portfolio management service for HNIs. And apart from that, they also have content on YouTube and other platforms where they produce financial education content and they might be getting some amount of ad revenue out of it. Now, the last two, I don't think they can expect a huge growth based on the company size. The first three are still going to be the primary business growth driver for the company in the coming future, and they will be competing with other companies like Zerodha, Angel One in this space. Now, Grover is trying to raise a capital of about 6,600 crore, and they're asking for a valuation of 61,000 crore. Now, with respect to this, the issue price that's coming is around 95 to 100. So let's try to understand, do they have the revenue and profits in place to support this $7 billion valuation? If we take a look at the revenue growth of the company was able to successfully grow its revenue by almost 50% across 2023 to 2024. And then from 2024 to 2025, they were able to grow it by about 30 to 40%. If we see the total assets of the company, they are also increasing. Profit should also be increasing. Wait a second. So in 2023, the profit was about 457 crore, and in 2024, they reported a negative profit of about minus 804 crore, and right now the profit is sitting at 1,824 crore. Now I want to understand what's wrong over here. I'm not sure like why they posted a negative profit, because a broking business should never report a negative profit. So let's try to understand what went wrong over here. So the primary reason why Grow posted negative profits in last year was escalating operating expenses, and they also had a significant amount of one-time depreciation. Along with that, SEBI in 2024 came out with a regulatory change because of which the revenue and the income from derivative tradings hurt brokerage linked fees for a lot of platforms like Grow, Zerodha, and all other broking companies. Apart from that, minor impact could have been because of interest and financing costs, but major like impact was because of the regulatory change that SEBI did last year. Now, the gray market premium of the company right now is sitting at 11. That means investors who are applying to this IPO uh, can be expecting a listing gain of about like 5 to 10%. Considering the issue size of the price range for the issue size is about 95 to 100. And GMP being 11, you can expect 5 to 10% of the listing gain on the listing day for this particular stock. If we see the subscription status, non-institutional investor have oversubscribed 2.26%, qualified institutional buyer are 0.2x, and retail investors have oversubscribed. So we can see a huge amount of sentiment push that can come into this stock after it's listed. Now let's discuss if you're applying to this IPO and you're holding this stock for, let's just say, 2 years, 3 years, then what's the growth plan on which you're betting on? So the growth strategy for Grow is going to be multifold. There are some strategic initiatives. Let's first talk about these. First, they're planning to deepen product attachment by cross-selling their product. That means if someone is buying a broking business, they're probably going to sell them the loan product uh, or a PMS product. They're planning to accelerate acquisition in tier 2, tier 3 market to increase penetration just beyond metro. So a lot of customers for Grow usually live in tier 1 and tier 2 city, and tier 3 is a user base where uh, a lot of investors have not emerged yet, and that's the user base that Grow is planning to capture by using this money. And I think the content creation strategy and the educational content through YouTube, through various channels, also going to help Grow achieve or make strides in this strategy. Along with this, Grow is also planning to improve the customer experience, and they're going to do that by having 24 cross 7 customer support using AI tools. Apart from that, they're planning to expand margin trading and loan against security offerings. That means if you have invested some amount in a stock, then Grow is going to ease out the facility of getting a loan on these securities, either for option trading or margin trading, or if you want to use that capital to invest in some other place or take cash out. So does it make sense for us to invest in this IPO? In my opinion, the profit right now is sitting at about 1,800 crore, and they're coming out with a valuation of about 61,000 crore, close to $7 billion. Now, with that valuation, they're asking for a PE of about 33 to 40. Considering the company can grow at above 20%, both in terms of revenue and its profit, I think this is a decent valuation that they're asking for. However, I personally will not apply to this IPO because I don't apply to IPOs. I usually wait after a company is listed for 6 to 7 months, and that's usually a good time for me to buy. Now, in that case, sometimes I have missed a lot of opportunities, but I think I'm fine missing the pitch when it's thrown at me and take a look at that later in the future. So if you're someone who is thinking about applying to Grow IPO, I think it might be a good decision for you. And that's it what I have for you for today's episode. I hope you enjoyed this video. Do hit the like button and subscribe to Vishal Wealth View. Bye bye. Happy investing.